Common question I get, shares or property? I'm definitely pro property. It's a safer, more reliable investment. Traditionally, real estate doubles every 7 to 10 years, has done in the last 100. Let's use an example. If you had a $50,000 deposit and you're looking at buying a $500,000 property, you now will own 100% of the growth of that property. So let's say that property grows at 10%, 500,000 grows to 550. That's $50,000 in upside. You've made 50 grand on your investment. If you put that in shares, you can't leverage as much. Even if it grows at 10%, you've made $5,000. Over time, that keeps compounding and the gap keeps growing. That's why buying real estate that you can afford and duplicating that process step by step, buying a second, third property, is where you build your wealth safely and securely. When is property a better investment than shares? I think when you have enough deposit to get into the property market and you're not over leveraging, it's going to be a better investment because you can leverage that money and buy a property and use 10, 20% deposit, depending how much money you have. It is safer and secure. 7 out of 10 millionaires in this country do it through real estate. A bank, which is a specialist at assessing risk, will give you 80 up to 90% loan against that property. And you can look at certain areas of residential real estate can give you 4.5 to 6% rental return on that, which means your loan repayments might be neutrally or positively geared, which means it won't cost you much or any money. Property has much better tax benefits, particularly when you're dealing in the new build space. Just to give you a couple examples, you can depreciate a building over a 40-year period, so the dwelling, 2.5% equally over the 40 years. You can depreciate the fixtures and fittings internally over 7 years. When it's new, you can depreciate at a much higher rate. What that means to your overall tax position, especially if you do your tax variation form, which means you get it back weekly or fortnightly, you can use that tax saving to service your loan on your investment property. Always segment a part of your savings and your earnings to use it to upskill yourself, to earn more money, to become better at negotiating, to become better at investing. But overall, keep putting your money into real estate because it's a safe and secure investment to help build your wealth for now and generations to come.